Greetings, welcome to my weekend market recap 26 December 2021. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearance Corporation to decide if option trading is suitable for you. I use the Q systems for my trading decisions. They run as add-ons to the Metastock and TradeStation platforms. Let's now look at the global markets first, starting with Australian index, all ordinaries. This is all ordinaries, weekly, daily at a glance template. In the weekly, after displaying the bearish headwind, price could not go up. You could take attractive short trades at that time. At the right edge, it is moving inside a range in weekly as well as in the daily. The range is created by trend line support resistance as well as watermark support and resistance. Where is it in the range? Is it at the upper end or the lower end? It is at the upper end. Do we have a bearish or neutral color candle? No, we don't. We have a green bullish color candle on Friday. Are we going to buy now? No. It is already some distance away from the recent low. Buying now will not give us low risk entry opportunity. Are we going to short now? No, because traffic light color is green. However, next week if it tilts down and the daily color changes to at least neutral yellow, then we may look for low risk shorting opportunities either in all ordinaries or even better in weak fundamental stocks in weak industries. Remember, looking back, right at this point I suggested taking such a short trade at the upper edge, and I suggested taking short call vertical trade. That trade was very profitable as price came down to the lower boundary, and when it came to the lower boundary, that was also at the lower edge where multiple bullish headwinds had come earlier that could lead to a recovery in price. You could also look for buying opportunities at this lower edge. So we short at the upper edge of a sideways move, buy at the lower edge of the sideways move, and again any buying at the lower edge that could be done using options verticals, short put verticals in this case. Those would be profitable enough when price went to the upper edge. That is the concept of the Q box sideways market trade setup. Using the box trade setup, you may look for a shorting opportunity next week if the price comes down from the trend line resistance. For short-term trading, it is moving sideways. Japan's Topix index what is the trend of topics index? Is it uptrending, downtrending, or moving sideways? It is also moving sideways inside a triangle pattern formed by trendline resistance and support. It is at the upper edge of the triangle pattern. The weekly color is yellow. Therefore, topics is more likely than all ordinaries of Australia to give a short setup on Monday if price comes down. Now, if Monday's close is so much below the current price that it is approaching the trend line support, then we will not have a low risk short setup. However, even if there is no low risk short entry opportunity that is also having attractive reward risk ratio in topics itself, you may look for shorting opportunities in topics constituents. How can you find out topics constituents, or in general any index constituent, and find out fundamentally weak stocks or strong stocks in 100% real time? You can do that in Q index. Q index is part of the Q Vital Unified program at present. Q index helps us look at the index constituents and quickly look at stocks that are up or down, and further stocks that are up and fundamentally strong and down and fundamentally weak. You may use Q index to look for shorting opportunities in topics on Monday or Tuesday if topics comes down from this trendline resistance or the next trendline resistance. Topics also moving sideways. China market CSI 300. Earlier, CSI 300 was moving sideways, then it broke out of the range. At that time, I mentioned that I would not chase the breakout. I would wait for a pullback and then for price to go up again, giving a proper trade setup. What could be a proper trade setup after a breakout and a pullback? It could be a go with flow long trade setup. That is a trend following long setup. Has it come? No, because go with flow setup requires a bullish flow, that is cyan color candle in the daily. We do not have that yet. And also weekly has certain requirements, those are also not met. So we don't have a go with flow long setup yet. Could we have other trade setups in CSI 300? Yes, we could have, because in these days we had a sharp and sudden drop which brought price to the trend line support, and then price closed above the previous day's close on this bullish shape candle. The traffic light color was still red, bearish, but that was fine because bounce long setup does not have any requirement of the candle color. When price gave a possible bounce setup on this day in CSI 300, we did not have high bullish pressure or high volume. Therefore, CSI 300 itself did not give a bounce setup. But then it is an index. CSI 300 did bounce up from trendline support after sharp sudden drop. It did not have bullish pressure or very high volume. What could we do? We could look at CSI 300 constituents and see if some stock that was fundamentally strong and in relatively strong industry was going up, probably also from trendline support with bullish pressure or very high volume. Then we could take a bounce setup in that stock on the same day the index itself bounced up from trendline support. That was 4 days ago. At the right edge, CSI 300 does not have any trading opportunity using the Q trade setups. What is the trend of CSI 300? For short-term trading, it is in an uptrend because it broke out of this sideways range and now it is having higher high and higher low, has trend line support, no trend line resistance. So we'll continue to look for long trade setup in the China market, and instead of trying to take the breakout trades, I would say that the better opportunity came on this bounce day, and better opportunity will also come if price can go up from here next week. CSA 300 is in an uptrend for short-term trading. What about UK market Ftse index? This is also moving sideways. Upper edge of a sideways move formed by watermark resistance. There is also a trend resistance in daily, some distance away from Friday's close. However, weekly has a trend line resistance right at the week's close or Friday's close. It is moving sideways at the upper edge of the sideways range. Already displayed a bearish indecision at the top on Friday. Friday's candle color was bullish but shape was bearish. If it tilts down from here, it may give a shorting opportunity in Ftse using fine-tuned intraday chart, or as I prefer, you could always drill down into the constituent stocks using Q index and look for weak fundamental stocks in weak industries that are also giving short setup on Monday. I will not like to buy now because it is at the upper edge of a range. That is not a place to buy. That is a place to look for reversal shorting opportunities. Ftse moving sideways. Lastly, for global market study, Nifty 50 of India. What is the trend? Downtrend. How we know? Lower high, lower low. We have trend line resistance, no trend line support. Price is moving between the lower boundary and the value area, that is the middle of upper and lower boundary levels. All those are showing that Nifty 50 of India, which used to be the strongest of the global markets, sometimes even stronger than the sometimes even stronger than the USA market, is now in a downtrend. And in fact, we saw all the other global markets now. This is the only global market that we study that is in a downtrend. Others are either moving sideways in a range or in an uptrend. So everything that goes up, eventually it also comes down. And now if you look back, right when the bearish headwind came, I mentioned that we could start to be cautious, and that was very valuable. This headwind possible reversal signals save the bacon a great many times. That's why I keep an eye on them, take cautious approach if they appear, and it helped me this time also. What kind of trade to expect now? The weekly backdrop color is bearish. Daily is in a downtrend, recovered from the lower boundary, came to the value area, came near a trend line resistance, and on Friday the candle has a lower tail, has a solid body, so the candle shape is indecisive. However, it also created a reversal candle. that is bearish signal. If price comes down next week and gives a bearish flow candle, that will signal the next go with flow trend following short setup. I will not like to buy now because the trend line resistance is very close to Friday's high. In fact, if price can go up on Monday, touches the trend line resistance and tilts down from there, that may give a very precise shorting opportunity that is low risk using fine-tuned intraday chart template. Overall, what is the state of the global markets? China market is in an uptrend. However, China market may not be correlated with other markets in any way. It may be moving on its own, not caring for how the other global markets move. If we leave China market aside, the other markets are either sideways moving or downtrending. None of them are uptrending now. That is a big change from a couple of months ago when all the markets were uptrending. Now let's look at the USA market. I'll continue to use Q Global running on Metastock. You could use Q Elite on TradeStation as well. Let's look at the market ETFs first. When I'm looking at the market ETFs or global markets, the first question I'm asking, is it in an uptrend, downtrend or sideways? For QQQ, the answer is it is moving sideways because it has trendline resistance and support. In the weekly, we can see for 4 weeks, it's not going anywhere. Down, then up, down, then up, not going anywhere, and that we can see more clearly from the daily that it is bound between trendline resistance and support. Moving sideways, where is it inside the range? Upper edge, lower edge or middle? Upper edge. Is that a place I'm going to look for buying? No. I'm going to look for shorting provided it tilts down from the upper edge next week. Sideways, preferred trading direction, bearish if price comes down next week. SPY, exact same conclusion in the daily inside a range at the upper edge of the range, in the weekly for 4 weeks, down up move, because it is at the upper edge of a sideways range where bearish headwinds came earlier that could lead to a price drop. Here I will be even more willing to take a short trade if price tilts down next week. Am I going to buy if price goes up, breaking out of the trendline resistance? No, because that will not give a low risk buying opportunity. My preferred trading direction here also is bearish if price tilts down next week. Dia, what is the trend? Sideways. Trendline resistance, trendline support. Where is it inside the range? At the upper edge of the range. I will be happier, like in case of India's Nifty 50, if Dia goes up little bit next week, reaches the trendline resistance and tilts down from there. Sideways move, preferred trading direction downward. Lastly, Russell 2000 ETF IWM, small cap ETF. What is the trend? That is in a downtrend, not in a sideways move. Has lower high, lower low in daily. We use the daily to decide the primary trend for swing trading. It is in a downtrend, recovered from the lower boundary to value area. If it tilts down next week, it may give a trend following short setup. If it goes up, will it give a buy setup? No, because the recent low is already quite a long distance away. Even if it goes up, it will not give a low risk buying opportunity. Direction downtrending, preferred trading direction bearish. I looked at all the 4 market ETFs and the preferred trading direction is bearish. What if I looked at the mega caps as a whole using the mega cap index? Okay, did I click something that Metastock is closing? Okay, close the program, no problem. I'm going to open Metastock again. Mega cap custom index, part of Q global market breadth. What is the trend? No trend. Also inside trend line support and resistance, probably near the upper edge than near the lower edge. So preferred trading direction again downward because that will give a low risk shorting opportunity. Mega caps are also showing sideways move. Now one thing to remember, why do I look at mega cap top 20? Why? I am already looking at the market ETFs. Why do we look at mega cap top 20? Because mega caps influence some of the market ETFs a lot. In fact, most of the market indices on which the ETFs are based, namely S&P 1500. Okay, let's leave S&P 1500. I am not analyzing that every day in the webinar, though I keep an eye on that using Q Global. Let's focus on the major market indices. S&P 500. Is it market cap weighted? Yes. Nasdaq 100. Is it market cap weighted? Yes. Russell 2000 small cap. Is it market cap weighted? Yes. So market cap is an integral part of 3 of the 4 major indices. Which one is not market cap weighted? That is Dow Jones Industrials. If all the other 3 major market ETFs or indices are market cap weighted and the mega caps are having huge market cap, they have an outsized influence on how the indices are moving, especially the indices which have mega caps in them. Which one does not have mega cap in it, though it is market cap weighted? That is Russell 2000. Russell 2000 is small cap, it is market cap weighted, however does not have any mega cap because it is by definition for small cap. Now a lot of traders look at all these market ETFs or market indexes or futures, and if Nasdaq 100 is going up or index is going up, S&P 500 or E-mini futures is going up, they tend to be bullish. And what will make those 2 major indices go up? Broad stock move can also do that, but mega caps can also do that. Mega caps have an outsized influence on Nasdaq 100 and S&P 500. That is why I study mega caps, to see whether market may go up. Market meaning S&P 500, Nasdaq 100 may go up just because the mega caps are going up. And if that happens, people will tend to be bearish if the major two indices are going up. On the other hand, sometimes if mega caps is moving sideways, like now, you may look for the indices that are not influenced so much by mega caps. Which are they? Dow Jones Industrials, because it is not market cap weighted, and Russell 2000 because it does not have any mega caps. So if mega caps are moving sideways, I am not going to focus on S&P 500 kind of stocks or Nasdaq 100 kinds of stocks, but I may focus on small caps or industrials, provided they are outperforming mega caps, and they should be outperforming S&P 500 also if I am looking to buy in them. Are they currently outperforming mega caps or S&P 500? Are they bullish? That is, are small caps, Russell 2000 constituents or Dow Jones Industrials more bullish now that I may look to buy because mega caps are moving sideways? Okay. Russell 2000, we already saw it is in a downtrend. Dow Jones Industrials, we already saw it is moving sideways. So none of those are giving me an alternate buying opportunity that I could look for, alternate buying opportunity that I could look for looking at mega caps being weak. What is the state of another custom index, that is the leader index? Leader index is a custom index created with market leaders in a bull market. In a bull market, we get the strongest of the strongest stocks, create a custom index using that, and in the bull market that will go straight up. You can see in this area the traffic light candle color is mostly green, very few yellow, in fact only one yellow in the middle, no red. How can we anticipate that the market leaders are not leading? Or rather than anticipate, how can we see that market leaders are not leading and these leaders tend to be growth stocks? If the leading growth stocks are not going up, probably other growth stocks are also not going up. Other growth stocks may be falling even faster. After this sharp up move in the leader index created from the best of the best growth stocks, we can see that it stopped creating any new high. Instead, we have large number of indecision candles. Instead of using this single chart template, let's analyze this leader index using the standard. Let's use the 3 chart template: weekly, daily, daily. After the sharp up move in the weekly and daily, we see we have a series of candles with upper tail, indices shape candles. The color changed to yellow, 3 in a row. Remember earlier we had only one yellow candle in daily in this long up move. Then we had bear release signal, and for the first time in a very long time the traffic light candle color turned red. It failed to create a new high. It created a lower high, bear release signal, traffic light turned bearish again from green, and then price came down creating lower high, lower low. If we were using the market leader index to study how growth stocks are doing, then right from here onward we'll be careful about growth stocks. Then it came down. Where did it come down to? let's expand the daily chart. It came down to the daily trend line support, which started from the area from which this explosive up move began. Now it came down to the same trend line support. So we could expect a pause at this point. And that happened. Price has gone up. It has gone to the value area. It is in a downtrend now. Downtrend because it has lower high, lower low. And if we look at longer period, we have trend line resistance, trend line support. So we may say it is also inside a range. And it is in the middle of the range. So that is not a trading zone. Middle of a range, no trading area. We'll wait for price to go down. That will give a go with flow short setup. Or we'll wait for price to reverse from the upper edge of the range or lower edge of the range. If we use lower edge of the range, we could start to buy at this point and probably book some profit by Friday's close. Now there is no trading zone. Now, if the market turns bullish again, and market meaning the overall market that we saw using the market ETFs, if that turns bullish again, is it bullish now? No, because all the market ETFs are either moving sideways or for IWM it is in a downtrend, so they are not bullish. Overall we can say moving sideways. If market turns bullish again, the question is, will the leading stocks that led in this area, will they go up again with equal force? Probably no, because people who have studied the leaders index over many bullish moves, many bull markets, they have seen that the leaders of a previous bull run often do not become leaders in the subsequent bull run. So if we have another rapid bull run for the market ETFs, market indices, market futures, we are not going to expect that the same growth stocks that led earlier will lead now. We'll have to create another list of leaders if we have another bull market. That will be coming afterwards. Right now, what we see is how we could use the leader index to start to be cautious from here onward. That would save us a lot of pain. The leader index came down this much, but individual growth stocks would have come down a lot more because these are the strongest of the strongest growth stocks. Where the strongest of the strongest growth stocks in this area. And it is not uncommon for growth stocks to correct by 50 or even more than 50% once they reach the peak. And one way to recognize a possible down move in growth stocks in general is using this very useful leader index. How did I get the stocks of this leader index at present? They are based on Dr. Jeffrey's virtual stock club meeting. Again, in the next bull run, we'll have to create another set of leader stocks and create the leader index from that using Q global market brand. The leader index is also moving sideways and in the middle of the sideways range, a no trading area. So we looked at the market from market ETFs, mega cap top 20 and leaders index. All are saying that they are moving sideways. Overall moving sideways. IWM is in a downtrend. What information can we gather if we look at market breadth total view? And instead of looking at just market breadth total view, let's look at the market total view index. The candle chart here is market total view index. What is that? That is a custom index created from two composites, Nasdaq, NYSE, and four major indices. In the current version I am using, the major indices are Russell 2000 for small cap, S&P 500, large cap, Nasdaq 100, tech stocks, and Dow Jones Industrials, industrial stocks. Those components, 6 components, are creating the market total view custom index that is plotted as a candle chart. What is the trend of the total view? If we look at the Q entry daily chart, Q entry daily here, it is moving inside a range created by trendline resistance, trendline support. As you know, my trading decisions are heavily influenced by my market bias, and my market bias is heavily influenced by support resistance lines created by memory trend lines or watermark pivot levels. Where is the total view custom index? What is the trend? It is moving sideways. Where is it in the sideways range? At the upper edge of the range. Am I going to buy even if price goes up? Not the custom index itself, because it will be far from the recent low. Where could I buy? I could buy right when the custom index jumped up from the trendline support. Following that technique, bounce technique, I could look to buy starting from this point, and I could look to buy starting from this point as well. Both were touching trendline support at the lower edge of the sideways move and also had bullish headwind at this point. So I could look to buy at these 2 points, not at the right edge on Friday, because it is already significantly above recent low. Am I going to short on Friday at the close? No, because the traffic light color is still green. We have a bullish shape candle. Instead, if price comes down next week, I'll be happy to look for a shorting opportunity in individual stocks that are fundamentally weak and industries that are relatively weak. That is how in Q Global Market Breadth we use custom indices. 3 custom indices, one for studying mega caps, because mega caps have outsized influence on certain major market indices. Leaders index that helps us anticipate a downturn, especially in growth stocks, and then total view that helps us be on the right side of the market. Being right side on the market is very beneficial. Why I say so? Because I shared a snapshot from one of the India brokerages that gives us a very visual presentation of the entire year's trading in terms of success rate. This is from Zerodha Broker, one of the largest brokerages in India right now. I actually shared this brokerage snapshot earlier, around maybe February, March, April, this time frame when I started using this account, and now I am sharing again at the end of the year. What do we see? We see a calendar plot. Green colors indicate those days trades were closed with profit, one or more, we don't know. We don't know from this plot. This just says on that day we had a net profit, and red means on those days we had a net loss. If we take that as a calculation, days closed with profit, days closed with loss, at the end of the year this account has 89.3% success rate. All these are short-term trades, all these are using stocks only, all these are using bullish trades only, and the account has few more restrictions because I am not a resident Indian. I am non-resident Indian. So when I trade in India, I have additional restrictions other than what I just mentioned, that I can take only long, I can take only stock, and I have few more restrictions. In spite of all those restrictions, I could achieve short-term trading success rate of 89.3%. What is the required success rate? The Q guidelines and philosophy slides are on my website saganandi.com. What we need is about 60% success rate, assuming 1:1 reward risk ratio. Now with 89%, almost 90% you may say success rate, you don't even need 1:1 reward risk ratio. However, the Q trade setups that I use, they tend to give around 1:1 success, sorry, 1:1 reward risk ratio. So you can see that I could achieve very high, I would say very high, 90% is very high success rate with even those restrictions I have on the account. And one of the secret of that success rate was that I could be on the right side of the market. And being right side of the market was possible for me most of the time, because I did not just look at market indices, market futures, market ETFs, but I also looked at several market breadth studies like I am sharing with you for the USA market. I use the market breadth studies for USA as well as for India. And that helped me in the USA market also. How? When was the follow through day? Let's expand the market breadth total view chart. If we used IBD canceling methodology, the follow through day that comes after the rally day within a few number of days, that would have been somewhere near the end of the current week, or maybe somewhere here after a rally day within X number of days. That is using canceling methodology. If we used Eureka signal that is created by Ian Woodward, may him rest in peace, we have the Eureka signal plotted on market breadth total view. We could start to look to buy from these points. However, if we use the full Q methodology, then as I explained just now, we could look to buy at trendline support at this point, especially so because we had a bullish headwind, and we could also look to buy at this point, bounced up from trendline support, and incidentally both of those also bounced up with bullish pressure for the total market view index. That means we did not have to wait for the Eureka day. These trendline supports and watermark supports are an integral part of Q methodology. They give the lowest risk entry opportunities. And yes, Eureka days are also fine, but you could also buy before the Eureka day using the trendline support and the bounce long concept. The market total view bounced up and you could buy from here. And then after looking at the total view, you could look at the major ETFs market breadth and also the composites market breadth to further decide whether you would look to buy industrials or small caps or tech stocks, etc. I look at them, but before that, as of Friday's close, let's look at some more insight from the market breadth total view. Let's look at not all the insights we have here, but at least some of them. Percentage of stocks above 50-day moving average for the total view. It is right below 50%. We may say 50% level. That's a neutral level. Overall, it is coming down for a while, but currently it is at a neutral level. Will it go up? Possible. Will it go down? Possible. Which will give a lower risk entry opportunity. A tilting down will give a lower risk entry opportunity. That's a bearish trend. Where is 3-month new high low? It is in the upper half, well above 50% level. That is bullish. Is it at the extreme upper level? Not yet. If it goes up little bit, I will look for a tilting down. That happens every time. At the lower edge, it hits the extreme low level indicated by these two horizontal pivot lines. Once it hits the extreme low, it tilts up invariably. Once it comes to the extreme high, it tilts down invariably. It is not there yet, but it is becoming overbought using close to becoming overbought using 3-month new high low. What kind of stocks are in favor? If you remember my last market roundup, I mentioned that it looks like the small caps are going to outperform. That is what I mentioned in the previous market roundup. That indeed happened. The cyan line, that is small cap versus large cap, tilted up this week. Small caps did better. Growth or value is doing better the current week. Growth outperformed. However, if we look at this range, growth is tilting down. So in the immediate week, growth did well. Longer term, it is not doing so well. Earlier, it was doing very well. If we look to buy when market total view custom index bounced up, let's look at the latest point of bounce up. Latest point where it bounced up from trendline support we saw is from this level. Then we could look at the two relative plots and we could decide to buy growth because growth versus value was tilting up. We could decide to buy small cap because small cap versus large cap was tilting up. So we could look at market total view custom index bouncing up from trendline support with bullish pressure and then further use the growth versus value and small cap versus large cap plots to decide what kind of stocks to focus on. That would be growth and small cap stocks. And then we could further look at the, let's look at the major indices. As I mentioned, I am able to be on the right side of the market probably more often than many other traders is because I spend time looking at this insightful market breadth studies. And here I am looking at the major indices market breadth, internal view, not external view. Dow Jones Industrials, Russell 2000, Nasdaq 100, S&P 1500, S&P 500. We just saw that when price was bouncing up in total view custom index, we would favor small cap growth stocks. So let's look at small cap. Small cap is this one. Let's expand this one. Why not expand this one? So we already decided from total view that at this point we would look to buy small cap growth stocks. What was Russell 2000 doing at that time in terms of market breadth? Look at the 3-month new high low. It hit the low extreme point. So that would also tell us that Russell 2000 in itself would recover from that point. We also had an indecision doji candle. I'll come back to the candle, but let's look at percentage of stocks above 50 MA for Russell 2000. I mentioned it that this plot can also be used to decide oversold condition. Whenever percentage of stocks above 50 MA for total view or for individual composites or individual market indices hit the 20% level, that is this red line, I start to look for buy setups. So that also came true at this point when the total view custom index was bouncing up. The Russell 2000 new high low hit the lowest extreme, had the indecision candle here, and we saw small cap versus large cap was tilting up. So all those would point to buying Russell 2000 at this point, and we could probably book profit in some of those swing trades. Now the last part of this puzzle is how to find out the growth stocks inside Russell 2000. As I mentioned, Q index has the ability to look at all the constituents. Let's use Q index for RUT, that is the Russell 2000 index. Once you type the symbol RUT, it's going to retrieve the constituent stocks from Refinitiv in 100% real time, and we don't have to maintain data lists. If Russell 2000 constituents change, we'll have the updated list here. Let's go back to the chart. When was the day when we had indecision shape candle? 20th December. 20th December, that will be Monday, in fact, Monday. So Monday we had the indecision shape candle and then it recovered. And if I look at the Russell 2000 constituents, we can see advanced decline 5 days bullish, 2 days bullish, 1 day bullish. Friday was a market holiday, and before 5 days it was bullish but not so much. 1 month is bearish. So right when we had all the signals coming together in market breadth total view, and then we could decide to look at small cap growth stocks, we saw that Russell 2000 market breadth studies were also telling us to buy small caps at that time. Q index would have told us the same thing, because you can see the advanced decline plot turned more and more bullish. How to find the growth stocks? We could calculate a scorecard of all these 2038 small cap stocks that are part of Russell 2000, and once again Q Vital is contacting Refinitiv to retrieve data, and then it will calculate the scorecard. Then using a single click I can find the growth stocks. Let us give it a few seconds to retrieve data for so many stocks, 2000 plus stocks. In fact, while it is retrieving the data, and during the webinar it may take a little longer than usual, let's look at the market from few other angles. That also is the secret behind me being right on the market more often than many other traders. Let's look at the sector industry stock advanced decline breadth 1 month to 1 day. 1 day bullish for sectors industry stocks, 2 day bullish, 5 day bullish, 10 day also bullish. However, 1 month is bearish. Is it getting overbought? It is close to getting overbought. When all these percentages hit 80% or above for 1 day, 2 day, 5 day, 10 days not there yet. 1 day, 2 day, 5 days are approaching the 80% level. It is close to being overbought, but not overbought yet. It can go up little bit more. We saw the market ETFs are at the upper edge of the range for most of the ETFs. I will also favor a bearish trend looking at the approaching overbought condition in sector, industry, stock, advanced decline rate. However, if I look at the bucket analysis, that is look at the constituents of S&P 1500 and see how close they are or how they are distributed around their Bollinger Band levels, we see that percentage of stocks that are at or above upper Bollinger Band, that is nowhere near 30% level, that will be considered overbought. It is only 8.8%. So it is not overbought at all from bucket analysis perspective. Is it bullish? Yes, it is bullish now because 75% of the stocks are above mid Bollinger Band. Not so long ago, this was not 75, this was mostly red, now it is mostly green. So market recovered, but in terms of bucket extreme level, it is not extremely overbought yet. It can go up further. I'll go back to finding the growth stocks from small cap, but before that, let's look at another angle for market analysis, that is the balance between bullish and bearish technical signals using Q Finder. First weekly interval, this is bullish and this is overbought. All signals 95% bullish, that is overbought condition. Strength signal also very bullish, trend continuation very bullish, 97%. Reversal is also very bullish. At the same time, bullish headwinds are not above 1%. If bullish headwinds in the weekly interval percentage was more than 1%, I could anticipate more up move. The more up move can still happen, but we don't have that indication from weekly bullish headwind percentage. It is overbought, bullish but overbought. What about daily signal? Thursday signal also very bullish. 87% of all signals Thursday. Friday was a market holiday. Bullish. Strength signals very bullish, 97%. Trend continuation very bullish, 88%. However, reversals were bearish, though the reversals in absolute number was very small compared to gap up. So here strength and reversal together is not bearish, it is continuing to be bullish because the absolute number of reversals are small. Still, we saw the market ETFs are at the upper edge of the sideways range for most of the market ETFs. We saw the same thing to be true for mega caps. So I will prefer the next trade to be on the bearish side, and we see a number of reversals. So you could drill down from here to look for bearish trades. Overall, the market breadth from technical angle is overbought. That will favor a bearish trend. Let's now go back to the Russell 2000 constituents. Vital has retrieved the data, calculated the scorecard. Let's go to the constituent stocks. Let's find the growth stocks. The stocks that had very large earnings growth in the last quarter. Many of them, and see how they moved up on Friday. Many of them went up by large percentage on Friday. Sorry, Thursday. Friday was a market close day. If we look at 5-day percentage change, we can see many of these growth stocks. These are growth stocks that are part of Russell 2000 that went up by huge percentages in last 5 days. What does it mean? That means when we did the analysis using market breadth studies, first looked at market breadth total view, decided to buy when it bounced up from trendline support, further decided to buy small cap and growth stocks, then looked at Russell 2000 for small cap stocks, further focused on growth stocks inside small cap. We could find all these stocks that eventually went up by a huge percentage in 1 week. The market went up, but not by so large percentages, and that is how you could use and you can use going forward the market breadth studies along with the market ETFs and sector industry stock advanced decline breadth in QH, technical breadth in Q Finder to be on the right side of the market. I would say much more often than many other traders to achieve the kind of success rate I achieved in the India market in an account with many restrictions. Now, if I'm going to prefer bearish trades, are those trades available today? Probably no, because on Friday the market ETFs closed higher. Not Friday, Thursday. They closed higher. Though they are near the upper edge of the sideways range, they closed higher. So the bearish setups may not be there yet. We may look for them next week. Having said that, in Q Finder, we saw there are certain reversal trades. I may not be able to find proper trade setup, but why not? We look at them, go to the bearish trades. Let's look at the bearish trade setups further. I have 32 stocks in the result. I want to look at weak fundamental stocks. I could look at their technical charts, but instead, in fact, okay, why not I do like that? I see there are several breakdown trades. On a bullish market day, if these stocks broke down, they may give shorting opportunity. I might not take the shorts on Friday because market was still up, but no harm looking at the charts to see if they may give low risk shorting opportunity next week, provided the market tilts down. If the market goes up, I'll not like to short stocks, but if the market tilts down, this will be probably better shorting candidates because they already started coming down even on an up day. So let's look at these charts first using daily interval. I know I'm at 1 hour point, so I'll try to go through them quickly. MDRX. This is looking interesting. I'll come back to it and look at it using 3 chart template. HOLX, whole logic, has multiple trend line support nearby, so I'm not going to look to short. Close this one. VALE, it is breaking down below trend line support. However, it's moving in a narrow range, so I'm not going to short it using stocks. Let's skip this also. It could be probably shorted using option strategies, or it could be shorted if it gives a go with flow short setup next week. But let's skip it for now. BGI, this will also give a possible short setup if we have a bearish flow candle next week. Let me close it for now. Novavax, it's inside the range formed by trendline resistance and support right in the middle of the range. Not going to trade it in either direction. BBIG broke below one trend line support, but another trend line support is nearby. Not a shorting candidate for me. ARE, this looks interesting. We have a bearish headwind. I'll come back to this. VCYT broke below one trend line support, but another support is nearby. Not going to short it. MDRX. MDRX broke below one trend line support, another support is nearby. That is MDRX, not going to short it until the next trend line is broken. ARE broke below one trend line support, however another trend line support is nearby. There is a bearish headwind, so I could be cautious if I had a long position, but the trend line support nearby is not allowing me to short. Close this. Okay, so we didn't find many shorting opportunities. That catch the eye immediately from the breakdowns. Was there any go with flow short setup? Yes, some of them. Okay, but some of them are also breakout that I already looked at. So let me delete the breakouts. Look at the go with flows without breakout, which will be these few. Let's look at them quickly. I'll not try to draw lines. It has trendline support nearby. Not really in a downtrend, moving inside the range. No go with flow short setup. This is BFB shares, BFB, Brown Foreman B shares. No trade setup here, close. AON moving sideways. There is trendline support nearby. Not going to short, close. CP, Canadian Pacific, inside the range near trendline support, not going to short. Not I. EBC, Eastern Bank share, inside the range has trendline support, not going to short. CC, inside the range near the middle of the range, not going to short. CTRA, this is in a downtrend, so I'll come back to this. DK, this is in a downtrend, I'll come back to this. Gdrx, this is in a downtrend, I'll come back to this. RCII, in a downtrend and also inside a range, but at the upper edge of the range. This could also be a shorting opportunity. I'll come back to this. Then we are back to CTRA. Okay, let's look at these few stocks using the weekly, daily at a glance template. So we have the complete view. The weekly backdrop is magenta, daily flow magenta, and a go with flow short setup indicated by the ribbon in a downtrend, has trendline resistance, no trendline support. Near the value area, lower boundary is significant distance away. Stop is nearby, just above recent high. So CTRA is giving a possible go with flow short setup. You may keep an eye on this stock next week. Okay, let's close this CTRA. While I close this and go to the next stock, let me also go to Q Vital and check out Gdrx Fundamentals and continue with the charts while Vital gets the scorecard. Close CTRA. Let's look at DK. This is also giving a proper short setup. Weekly backdrop bearish, daily flow bearish, a go with flow short setup in a downtrend plus tilting down from trendline resistance. Stop will be just above recent high, lower boundary significant distance away, giving a proper go with flow short setup. DK is also a shorting opportunity. Now let's go back to Q Vital. CTRA, how is its fundamentals? Not so weak. Valuation in the middle. Let me change the color. Valuation in the middle. High growth. Next earnings 21st February. Funds are accumulating. Oil and gas exploration and production. Technically, it may be a short setup next week, but fundamentals are quite strong. I'm not going to consider shorting it. Instead, let me look at the stock DK. DK is also giving a go with flow short setup. I am using Vital to calculate the scorecard, and meanwhile I'll go back to the charts to look at the next stock. Close DK. Next stock with a shorting opportunity is Gdrx, growth flow trend following short opportunity. Let's look at weekly, daily at a glance template. This is also looking very attractive for shorting. In weekly, backdrop color is magenta and it broke below the trend line support. Daily in a downtrend has trend line resistance, no support, lower high, lower low. Recovered from lower boundary and went down again. Very bearish shape candle on Thursday, bearish color and the growth flow short setup. This is Gdrx. Now let's go back to the last stocks fundamentals, that is DK. This is overvalued stock. Overvalued stock has earnings growth for DK. This is also oil and gas refining and marketing, energy sector. However, this I am more willing to short. The last stock we analyzed, fundamentals were not allowing me to short. DK fundamentals, they allow me to short because it is overvalued. I need either overvaluation or negative earnings growth. Here it's overvalued and I see earnings quality is also poor, and here funds are not buying. This is much weaker than the other energy stock I saw just now. So DK is a possible shorting candidate. What I do with DK, I may write it down in a sticky note. Let me do that on the other monitor. And now I will also like to look at Gdrx fundamentals. That is also looking quite weak technically. So Gdrx. So I'm completing the 360 degrees analysis in live session. Gdrx. While it is retrieving the vital scorecard, I can go back and look at the next technical chart. Last one, RCII. Here, though the daily is looking bearish enough, weekly backdrop color is bullish and it's inside a range also in a way. So when I looked at weekly, daily both, I'm not happy to short RCII. So I am left with one stock so far, DK, and I would like to check the fundamentals of the last stock we analyzed, Gdrx. This allows shorting. Medium valuation, funds are not accumulating, not enough earnings growth. So these fundamentals allow me to short healthcare technology. So I'm left with two stock from this 360 degrees analysis, Gdrx and DK. Let's look at Gdrx's industry to complete the 360 degrees analysis. Industry relative score checked from QH. It's weak. It was strong in the middle, weak for a long time, and weakened again with deceleration over 5 days. So healthcare technology industry is weak, allows me to short. So Gdrx is a shorting candidate. And if I go back to DK, I'm going back to DK so that I can, sorry, not DK. I'm going back to DK to check its industry. DK. I already know fundamentals allow me to short, technicals allow me to short. So I'm just going to look at the relative industry strength for oil and gas refining and marketing using QH. It is weak. Instantly from the color coding I see it's weak. So we are left with finally two stocks that are giving 360 degrees short setup even on Thursday itself. One is DK, this stock. go with flow trend following short setup using unambiguous checklist, and another is Gdrx, also a go with flow short setup. And both these are fundamentally weak enough to allow shorting in weak industry. That is how in every market you can study the market first using the market breadth studies, secondary stock advanced decline breadth, technical breadth, and market ETFs, futures indices. Decide a market bias and look for trade setups aligned with the bias. Be ready with the trade, whether to use stock or not. Use options, if options, using verticals or naked options. What is the quantity of each trade you want to take? You can decide all of them, record them in Q diary, and when you are ready to pull the trigger, you can pull the trigger easily because everything you have pre-planned. That is how in any market condition you can use the Q systems as I do in these live sessions, the same thing that I do in my real life trading, to get trades where everything is aligned and you can do it with confidence using unambiguous signals, and the result should be good enough to make a reasonable profit from the market, as my trading result success rate shows. Thanks a lot once again for joining me. I look forward to seeing you in my next public session, which will be most likely next weekend market recap. Have a great weekend and trade profitably. As I always say, no reason not to do that. Thank you.